Hey guys, this is John. Welcome to the free video. So we got an interesting market here for sure. More focused on the daily chart here. On the weekly, we had this great squeeze, big powerful move up, and then since then, from a weekly perspective, we're just in chop mode. I mean, we're trading above the 21, so it's bullish, but it is a bullish chop. From a daily perspective, though, this market has been struggling. Anytime it sticks its head above this channel, it gets knocked back down. So the question here is really are we going to come back down and test the bottom of this channel at 230 bucks, okay, which is a 4-point move down in the spiders, which is a 40-point move down in the S&Ps, or are we going to be able to gather some steam here and rally? And the way that the markets are acting right now is definitely more on the bearish side, not extremely bearish, but it's just like these pieces of the puzzle are kind of coming together. And if you look at the yen, and this is the ETF for the yen. Essentially, if the yen is going higher, okay, in yen futures, the yen cash goes low. I mean, is inverse. But if the yen futures are going higher, as represented here by FXY, that is definitely downward pressure on stocks. But what I've noticed in this is that if the FXY is trading sideways, stocks can rally. But if it is pushing higher, stocks are having some pressure. So the question is what do you do in this kind of a situation? Because it's not like the indexes. I wouldn't call the indexes here super bearish. If you look at some sectors within the index, like XLP, consumer staples, it looks great. So it's hard to, get super bearish about the indexes in general if some sectors are doing okay. That typically means that the indexes are just trading sideways. So what do you do? Well, I just like to look at what I call honey badger type stocks. So like CMG has earnings next week. It's got a weekly squeeze. It could care less what the indexes are doing. Okay, so this is the kind of thing where in this environment, it's like, all right, the indexes on the short side, may work and may not. Just like for the examples I just talked about. But there are stocks out there that are kind of just doing their own thing. So I kind of like the idea here of having some honey badger type stocks like CMG that are kind of doing their own thing. CELG also. I mean, the markets were down today. It's holding up. I like this daily squeeze. I like that too. Alibaba. It's up today. It's got a lot of open interest at 110. So it doesn't. I don't think it's going to be able to break through this prior to monthly expiration. But again, there are stocks out there that are holding their own. MLNX. Okay, it's not great, but it's holding its own in this market. And so what I like in this is looking for, okay, so then what happens is, what if the market does roll over? Well, great, and then we can buy calls on something like FXY, okay, because if the market's gonna roll over, this is gonna go higher. So that's how we're trading this, getting some long ideas that are doing their own thing. They're not so concerned about the rest of the market. And then if the market does roll over and just kind of die, doing some call options on something like FXY, okay, or the VIX, where at least if the market does take down some of our longs, we're a little bit hedged. Okay, so that's what we got. I'll dive into more examples and details in the premium video, but hope that helps. Remember, tomorrow, Thursday, is the last trading day of the week. We'll have a long 3-day weekend. And my advice over the long weekend is for tomorrow, really think about how you want to spend your 3-day weekend. It is no fun spending, especially a long weekend, worrying about your positions. So I would just say that for tomorrow, and this is what I'm going to be doing, is that anything that's not working, cut it loose. Anything that is working, great. But just being in a situation where over the weekend you're kind of like, when you're trading a demo account, you don't really care. I would highly encourage you. It's very rare as traders we get 3 full days, of kind of chilling out, so to speak. And if you go into the long weekend with a huge positions on, you're going to have a crappy weekend, and you're going to come into the markets on Monday frazzled. Okay, so that is my advice from doing this for a long time and having done both ways, because you can always get back into your positions. All right, hope it helps. Have a good night, and we'll see you at the next update.